Welcome to the panel on stablecoin growth be the biggest driver of global digital asset adoption. Will stablecoin volatility? I think so. So I'll quickly introduce myself and then we'll go down the line. You guys to do names, what you guys focus on. So as co-founder, CTO Hashnode, we were an on-chain asset manager. Most notably, what we're most known for was a tokenized money market product called USYC. And then about a month ago, Circle acquired us.
Please make sure that you flick your microphone on, please.
There we go. My name is Sean Judge. I'm a general partner at Castle Island Ventures. We're an early stage venture firm focused on infrastructure and applications powered by public blockchains. We do pre-seed, seed, Series A investing, $2 to $20 million checks. Most of what we focus on is financial market infrastructure, cybersecurity. Stablecoins is a huge theme. So we've actually made 17 investments over the last 5 years in the stablecoin space, everything from issuers to infrastructure to consumer fintechs and B2B plays.
Louisa by Mysten Labs. I focus on stablecoins and payments on the partnership side. Mysten Labs is the original contributor to Sui, the layer one, based off of Move. And I'm really excited to discuss this topic with you all.
I'm David Schwartz, CTO at Ripple, the company behind the RLUSD stablecoin. And I'm co-creator of the XRP Ledger, the first blockchain that wasn't just a clone of Bitcoin. I'm currently mostly focused on institutional DeFi.
Hey everyone, I'm Tomer, head of product at the Stellar Development Foundation. An L1 blockchain, been around since 2014. I usually represent the most veteran blockchain in a panel, so I'm happy that David is here this time. So as an L1 blockchain, really focused on financial inclusion and bringing equitable access to the world's financial system.
Great. So we'll start off with our first question. Are stablecoins the biggest driver of global digital asset adoption, or is the biggest driver of global digital asset adoption crypto trading, and stablecoins are just amplifying that activity? Start with now.
Yeah, I mean, I'd point to in 2023 we looked at some data. We published it at Token 2049, which just showed that spot exchange volume had plummeted, and despite that, the monthly active users holding stablecoins was up and to the right. The stablecoin volume was up and to the right, which led us to saying, what's happening here? People are using this in some other way outside of just trading crypto assets. That's led to a lot of investment decision-making, things in the remittance space, things where people are holding digital dollars globally. So it's certainly bringing in an entire new group of people, which I think is exciting. That being said, I think the reason that a lot of these things are able to happen today is because a lot of this trading infrastructure actually was created. So that's local brokerages, it's on and off ramps. If you even think about what's happened in the last few years, going from writing down a seed phrase to biometric wallets. So there's been a lot of like things that have been built to enable kind of an average person to enter into our world, I guess. So I've certainly seen a total shift in the last couple of years in terms of onboarding new people through different use cases around stablecoins.
I tend to agree. I do think it's a former. I think currently trading represents about 70% of total dollar stablecoin circulating supply. And then the remainder is made up of what, maybe 15-20% in DeFi, and then the rest, 10% in payments, sadly. But I think in order to get to a scale of broader global adoption, a lot of things need to improve from an infrastructure perspective, which I'm sure we'll get into shortly.
Yeah, I don't think you can deny that historically, like one of the key drivers of stablecoin use was as a tool for cryptocurrency trading, as a form of dry powder, as a way of moving assets between chains and so on. But I also think that you're going to see tremendous growth in other areas that are going to drive stablecoin growth, over the next few years. Things like tokenized real world assets, almost anything you do as a payment or collateral. Like if you look at the primitives that make financial systems work, collateral, well, if the collateral is a cryptocurrency, then we can't agree on what the value is going to be a year from now. It makes sense to have a stable coin as collateral. If you're going to do payments, again, similar issues. So I think you're going to see tremendous growth in stablecoin adoption. I hope coming from areas other than cryptocurrency speculation, but other forms of like traditional financial system, just better, faster, cheaper.
Yeah, definitely agree with that take. I see stablecoins as being kind of like the checking account equivalent technology of the on-chain economy. And so they're kind of like the base of everything. And so, yes, right now, speculation is kind of like the gateway drug into this. But at the end of the day, people are holding stable coins and are seeing that you can actually do payments. That there's a lot of other financial instruments happening there. And I think that another really cool thing that has happened in this recent bull cycle is that we're seeing a lot more, even the speculative trading happening on-chain in DeFi. And in that universe, stable coins are a prerequisite. Right, so we're getting more and more stable coins in the hands of people, and hopefully we can move away from speculation and into some more exciting use cases.
Yeah, that's great. And Louisa, you had mentioned that even payments is such a, like, while it's a industry talking point, it's still really small. So like, what needs to happen for those types of use cases and like remittances? When do those things start to become more than just our talking points, right? Is there really small percentage of total activity at the moment?
I'm happy to start. Really, ramps. We need better on and off ramps and ramps that actually work. If I had a Swede token for every time someone told me that they're trying to purchase crypto via credit card and it's not working in the jurisdiction that they live in, I wouldn't be here with you all today. But having said that, I think we all have a role to play, and I think I feel like the industry is moving in an optimistic direction, and I'm sure Stellar and Ripple have their 2 cents in on how to improve the ramp networks that they currently have.
It's almost as if you worked at Stellar at one point, Louisa.
I'll just say I don't think it's a talking point like at all. I think it's like actually happening. I mean, we invested about 14 months ago into a company called Felix, which is a remittance business from US to Mexico and a bunch of other LATAM countries now. It's built on WhatsApp. You chat with the chatbot named Felix. You say, I want to send grandma $250. You connect your debit card. Grandma can go pick up pesos instantly or connect her debit card. They have 250,000 active users right now. I would bet 99% of them are completely unaware of that there's crypto or blockchain or stablecoins involved at all. But this is a company that was doing 7, 8, 9 million of volume a year ago, and they're doing 135, 140 million of volume right now. And so if you look at that, they're greater than 2% market share from all flows from US to Mexico, which is one of the largest corridors in the world. And that's what's happening is when they're pulling the money from someone's debit card, they're minting USDC, they're sending it to Mexico, and they're off-ramping it into pesos. So these things are like actually happening. There's countless of other examples. Dollar app in Latin America right now is, over 2 billion of TPV, all stablecoin based payments, sending money to people cross border. So these things are like absolutely happening. And the reason they're happening, as I touched on, is because you do have on and off ramps. You do have local brokerages. There's still a lot of infrastructure that needs to get built to optimize these things, to be able to like handle massive flows onto an exchange of USDC and getting access to local fiat. But I no longer think it's this like pie in the sky, like for the last 10 years is going to be remittances. Like this is an easier way to send money. There's like real businesses doing tens of millions of dollars a year, growing 10x year over year that are building these things.
I think the challenge that we have to resolve is where you see that there's like 2 types of people you might send money to. People who are well connected to the financial system and they just want money in their bank account. And people who are poorly connected to the financial system and they have to be able to use the money they've received to pay their bills, to buy groceries or whatever immediately. And we just need that user experience to be just great.
And I also think it's just on that, like financial services tend to actually work fairly well in the US. Like if you're a person, and so sometimes it's hard for people to grasp like how difficult it is to move money and save money in a lot of the countries we're talking about, where like that is the like 10x improvement.
And also we're just wealthier. So like for me, if I have some money where I can't get to it, it's not a big deal because I have other money where I can get to it. But for 99.5% of the world, they don't have money that they can be able to not get to when they need it. They just don't.
Right. Yeah, totally agree with this. And I think, Sean mentioned Felix who work on Stellar using USDC. And it's true that the payments volume is still, comparatively small to other things we're seeing in the industry, but there is clear product market fit. And I think that's the important thing. And we're seeing these things grow. We're seeing refugees in Ukraine getting their disbursements using Stellar and MoneyGram. I think MoneyGram is a really great example of how you can take, like a veteran financial institution, connect them to the on-chain economy, and you can get into one of like 300,000 agents around the world right now and move from USDC on Stellar to cash and vice versa. And that's huge. And we're seeing rural economies in Colombia, for example, where they don't have access to financial instruments, are getting payments via the US and are able to take it out through cash because a company like MoneyGram is very well connected in these regions.
Yeah, so do you guys think it's like a just an awareness thing at the moment that over time it'll become more and more used, or is it something else?
No, I still think we need better ramps. And on top of that, the other point I'll make is I think we need better liquidity providers for these ramp partners that can provide the liquidity for USDC against the local fiat pairs. Because sometimes even though these off-ramps exist, but they can't fulfill the demand to convert into the local currency for the amount that the receiver is trying to off-ramp for. So I think these two themes need to be solved for before you start seeing the payments use case really take off.
Yeah, I think it's a good segue into why haven't we seen more non-US denominated stable coins? Like Circle has EURC and it has some traction, but like we haven't seen, very many others take off. Why is that? Is that a signal in the market around not needing it? We just need like the better off ramps into the local fiat, or what else what is happening in that space?
I mean, I just think that like it just proves that like the dollar is king. The U.S. economy is stronger than most other economies, and it is the strongest economy, I should say. But it's been kind of this experiment, right, where it's like in a permissionless way you can access other stablecoins, but 99.6% of people holding stablecoins are holding U.S. dollar denominated stablecoins. I think what will happen is because you'll have currency control issues in certain countries, and like I think there will be currencies that do collapse around the world over the next decade because of stablecoins. But I think what you'll see is that you'll have like local brokerages complying with regulators that are forced to swap part of the balance into a local stablecoin. But the more crypto native people become, the more they are going to realize that this is permissionless and that they can actually take that money out and swap it into US dollars if that's what they want to be holding.
Yeah, I totally agree with that take. I think that regulation is going to be a huge driver in getting like more local stable coins available. I don't think that economies around the world are going to be cool with the dollarization of their economy because of stable coins. And I think that there's a really positive move from, the CBDC discussions of the past, which hopefully are dying off, into kind of like more interoperable local stable coins. And so you'll have, local merchants that are required to accept local stablecoins, and then the on-chain economy will help people move between the dollar and these stablecoins.
I don't disagree that the U.S. is the strongest economy, but I think we haven't seen other currency stablecoins succeed is because there hasn't been a good product market fit. What are the use cases that these local geographies need a stablecoin for? You touched a little bit upon whether or not needing a euro stablecoin in Europe is
this speaks. I see that is repeatedly. Today's issue is the easy stay base this step is test one to the step this celebrated with good. CUV CC
I'm interrupted.
76 credits. Please, 6 delicious.
Fun together for the back.
Hey, I think this is working.
Hey, it's working.
All right, there we go.
I'll just quickly wrap up. My point was there are certain countries, they have very effective local payment rails already, so they don't necessarily need to adopt a local currency stablecoin. And again, there needs to be a reason and a proper use case to create. I don't know. Stellar has like 50 stable coins in different currencies.
Yeah, and I think this is
you, Tumber.
and I think this is actually a pain point. Like, when Stellar launched, we launched with this idea that every gateway around the world is going to have their own locally denominated stablecoin, and all the forex is going to happen on chain. And there's going to be this, holistic cornucopia of assets. And what we discovered is that for the most part, these entities prefer dealing with dollars. And when they actually want to do their forex, they want to do the forex in their off-chain liquidity venue that they're familiar with and they know how to work with. And so I do think, like Louisa's right, like it's all about potentially like having more forex liquidity on chain, and I think that's going to help with that. But you got to have a reason to do it. And so the fact that it's kind of like an elegant solution from like an engineering or a product perspective is not enough. You need to have kind of like market demands.
This is a tremendous opportunity for. Is it working? Yeah. This is a tremendous opportunity for the United States to increase demand, both for for dollar-denominated treasuries and other type of low-risk assets. I think in a sort of level playing field, the dollar is probably going to win for substantially the same reasons that Bitcoin tends to win. It's the biggest. It's not a technological thing. It's just that it's a stable currency anchored to a reliable economy. Since World War II, the United States has benefited significantly from the fact that we can produce dollars very cheaply and sell them to the world at a nice price. I think it's a tremendous opportunity, and I think that's going to put pressure on other countries that don't want to be dollarized, that want to retain the ability to, fund things through inflation. They're going to have to be competitive too. Otherwise, they're just going to get edged out. So I think there is going to be a tremendous economic opportunity for the United States. And I think the United States is probably going to try to capitalize on that.
Just on that. I mean, we put out a report in the last 2 years on stablecoin adoption. And one of the things that we noted on that was that, if you look at stablecoins and you compare them to a sovereign nation, they're like the 14th largest buyer of U.S. treasuries, which like may not mean much to people here, but that like we've gone in the last 5 years from the total stablecoin market cap being about $10 billion to $230 billion a year. And now they're a top 15 player in terms of buying treasuries. Like that is crazy. Like that's one of the craziest things that's happened in the last 5 years. And I don't think any of us would disagree that like that is heading in one direction. Like the 230 billion is going to 2 trillion, whether it's in the next few years or 5 years, it's happening and it's going to keep going up.
Absolutely. If we take a step back, and we focus on U.S. based stablecoins, there's been a proliferation of those. Right? There's DeFi stablecoins. There is centralized stablecoins like Circle. And I was curious what your guys' take is on what is like the value of having a fragmented market for liquidity across these stablecoins, or is a more centralized framework the better one?
I can start. I think I don't think you're ever going to have a world where there's one. I mean, obviously someone's going to be on top, but I don't think you're ever going to have a world where there's one that's like so dominant that the others are irrelevant. There's no point in building these sort of decentralized ecosystems that nobody can own or control if there's one company that's holding all the assets. And I think there's going to be competitors that are always going to look for a cut. They're going to try to squeeze more yield out. They're going to try to come up with marketing techniques to give some of that yield back to the users. And I think you're going to have a competitive marketplace where there's a number of top tier assets. You may even see some focus on payments, some focus on DeFi. So I think you're going to see I think you're going to continue to see what you see now. It's just everything's going to be bigger. There's going to be someone's going to be on top, and number two is not going to be all that far behind, and there's going to be a long tail kind of chase. I don't see that changing.
Yeah, I think, the more yield-bearing stablecoins we're going to see, the more competition there's going to be around, how much yield and how distributed to the users. And so I think this place where we're at right now, where there are a bunch of stablecoins and functionally they're doing the exact same thing, I don't think that's going to stay for long. And, people are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stablecoins are the way to do that. And there's going to be a lot of competition with that space.
I'm sure you like hearing that from US-wise.
Love it.
Well, just going back onto the liquidity fragmentation point. I think we're actually going to start seeing more creative solutions come into the market. So very similar to what Binance did a couple of years ago with BUSD, when they flipped all of their deposits from USDC, Tether, other types of stablecoins into BUSD. We're starting to see that trend in DeFi as well. So an example, one of our protocols, Aftermath, launching MUSD, the purpose of that is to consolidate all the different stablecoins that are being traded across the different DeFi protocols into one single liquidity pool. And so again, that's solving for the trading use case that we discussed earlier. And I think liquidity fragmentation is annoying for people that are trading because they want to find a venue for the best liquidity to purchase a volatile asset against one stablecoin. So I do think it's.
Yeah, I totally agree. But also, like, fragmentation sounds terrible, but I think because of the way that DeFi and the way that blockchain is constructed, the way that you can actually, compose atomically all these different instruments, fragmentation is not that big of a problem in DeFi as it is in traditional finance.
Yeah, I mean, ultimately, I think there will be a power law. And to David's point, I think it'll be probably use case specific. So, I mean, Louisa brought up the point around, like, we need better liquidity. Like, when we conducted a survey in 5 emerging markets where there was high crypto penetration. We asked people, like, why are you using Tether? Why wouldn't you use USDC? And a lot of the responses we got were like, it's been around longer, there's better liquidity, it's what my friends use. Some of that, like, those network effects are going to be tough to crack. But, if there was better liquidity, maybe there's, like, more people are using it. I just think that the top 5 stablecoins in 5 years are going to have, like, okay, that's what institutions use. That's what's used in emerging markets because they're just entrenched from a liquidity and a mindshare perspective. That's used for payments. But I think there will be tons of stablecoins. It'll just be a power law.
Yeah, I think it's a natural progression towards something that's very near and dear to my heart. Louisa, you kind of like pointed at it, which is tokenized money market funds, which are offering stablecoin with a yield component to it. Do we think that that's going to pave a greater, or help pave a path for greater institutional participation in the blockchain space?
I don't know if it's going to pave a better way. I think tokenized money market funds is a great instrument. It was the first that we've seen in real world asset tokenization. I think we can learn a lot from the BlackRocks, the wisdom trees of Franklin Templetons of the world and how they tokenize their money market funds. But I think now we're starting to see more financial instruments being tokenized as well, from credit funds to real estate to gold. I think all of this is going to continue to build more institutional confidence around the ability to drive more value by leveraging blockchain and bringing their assets on chain. Is that?
Yeah, I think it's an interesting first step. A lot of these RWAs that we're seeing are not very interoperable. They require KYC. It's hard to get a hold of them, especially for retail. And then when you finally have them on chain, they have all these restrictions. It's hard for them to play well with DeFi. And so I think it's a first step. But, and especially with the new administration in the US, I think that we need to see this open up. We're seeing RWA issuers outside of the US doing a lot better in building these like actual permissionless RWAs. We have Etherfuse that are issuing a bunch of government debt on Stellar, for example, CETES in Mexico. And, the Mexican government and authorities are actually encouraging secondary trading. And so anyone can just like go online and buy these assets, including retail. And that's where real adoption happens, when you can actually do stuff with these assets.
Got it.
And I think pivoting to use cases that aren't like high risk at high reward, that aren't essentially gambling, is like key to the maturity of the industry and being able to reach the points of mass retail or even mass institutional adoption. I think like they're kind of boring. But like I think, as was mentioned before, like we need the equivalent of a checking account. We need the equivalent of a savings account. We need the equivalent of like a stock portfolio. We need those very basic TradFi functions for the ecosystem to be compelling. And I think tokenized money market funds are definitely like a key step in that direction.
Great. Well, maybe we'll do one really quick fireside thing where it's like 2 things what you think is going to happen in the market over the next 2 years. As we wrap up, I think we've got 1 minute left. Or just like, what do you think is the most exciting thing happening in the next 6 to 8 months?
Related to stablecoins?
Or, yeah, and digital asset adoption.
I think the stablecoin bill could be huge. I think that'll just further legitimize the broader asset class. Obviously, like, choke point is over, SAB 121 is over, banks and financial institutions can start to touch these things. But I think having a stablecoin framework here will be a huge tailwind for the industry.
Okay, 2 predictions. 1, stablecoin trading volume in DeFi will overtake centralized exchanges. 2, we are going to see more financial institutions leverage stablecoins for B2B cross-border settlement use cases.
I can't top that.
We can finish here. Okay.
I think the big trend is basically the barriers are coming down between traditional finance and decentralized finance. And I think that it's not going to be this or that. By the end of the year, we're going to have a lot of users getting access to financial instruments. They don't actually know what's behind the scenes. They don't care about it, whether it's kind of like a trust minimized aspect to it, whether it's an RWA, whether it's a combination. In terms of users, they just want to understand, what's the financial instrument they're getting, what's the risk profile of this thing, and what's the yield that they're getting, and what the use cases that it's enabling.
I'll just say every use case needs payments, and stablecoins are great for payments. And so if we don't get payments right, like nothing else is going to work.
Awesome. Thank you so much, Eric.
Thank you.
Well,